This is Terrence Andre Banks with Information Age Financial Solutions, coming to you with another great article found it from Mish Talk. And the title alone always sticks out to me. That's what gets me to read the articles. And this one is just really one way to pay attention to. It's really short. The median family net worth under 1989 level, debt to money worth since 1962. And of course, when I'm looking at this information, I'm always looking for just another aspect to show that we're living in the most interesting economic times ever, and one to be quite concerned about, because even though we had the correction in 2008, it was a blip on the scale if you compare it to where we're going to head. And I believe a lot of this is going to start to unfold in 2018. As the stock market soars to new highs, here's some sobering statistics to consider. The stock market is at an all-time high, but Americans owe more, save less, and are poorer than decades. Negative percentage wealth on rise. Share of the U.S. family was zero or negative non-home wealth. And look how it went down in 2001 and then spiked up again, where there's negative non-home wealth. And the median family net worth has dropped down dramatically. So it went up, it spiked, and looked like it spiked in 2007 before the crash, and then went down dramatically, and it did a little blip up in 2016. Listen to some other things he said about the sobering stats. The greatest share of Americans have more debt than money in the bank, and at any point since 1962, according to Deutsche Bank economist Torsten Slock, 30.4% of U.S. families have negative net worth despite the recovery in housing and the stock market. Even with the Dow Jones continues going up, it's going to be 25,000, and the housing correction that put it in an upward trajectory, and we're getting back to the numbers that were before the crisis. The net worth has, despite the recovery, has also dropped down. Median net worth is below what it was in 1989. Inflation-adjusted net worth may be the worst in history. 78,000 is not worth what it was in 1989, to say the least. So the median family is worth about 78,000. Definitely a quick article to read. I'm going to click on here to see if anything else about that. Go to another one where he might have gotten some information. And this is from Axios.com, and I'm just going to pull it up here, and I'm just going to read a little bit about this one. Americans owe more, save less, and are poorer than in decades. A great American shares have more debt than money in the bank at any point since 1962, according to Deutsche Bank economist Torsten Slock. Why it matters. The data suggests that the third longest economic expansion in history and the lowest jobless rate in 17 years has benefited an exceedingly thin slice of the American public. That's why it's important. And that's just, he shows it right here. So that's another quick one to look at. If you go to the original article, you might click on that as well. And it shows exactly why here. That's why it's important. So until my next video, keep abreast of the economy. If you're not crazy, if you think things seem a little bit strange and if things are tougher for you, you're not alone, and just be mindful of that. We're living in different times. So I believe something's going to correct in 2018, and you need to be prepared and be mindful of it. So until my next video, I'm out.